Hey there, it's Bram Kanstein, and in this episode of Bitcoin for Millennials, I'm joined by Alexandre Laizet. He's the Deputy CEO and Director of Bitcoin Strategy at the Blockchain Group, Europe's first Bitcoin Treasury Company.
And I realized that without financial freedom and sovereignty, you don't have any freedom at all.
Under his leadership, ALTBG has become the best performing stock in France and Europe, delivering a staggering 1,000% BTC yield year to date and a 3,000% share price increase.
Adopt the simplest approach, which is to just raise capital, accumulate Bitcoin, hold it forever, not sell it, not lose it.
In this conversation, we dive into Alexandre's personal Bitcoin journey, the bold moves behind ALTBG's success, and what the future holds for Bitcoin in Europe and beyond. If you find this conversation valuable, please like it on YouTube and subscribe on here, or follow me on any of your favorite podcasting platforms. That will help me to reach more people and amplify the message on Bitcoin even further. I appreciate your support. Now let's dive into this episode. All right, Alexandre Laizet, welcome to Bitcoin for Millennials.
Hello, Bram, how are you?
Very good. Thank you so much for coming on. I've been following your journey with a lot of interest. And we briefly met in Vegas, and I'm happy to kind of like dive into your Bitcoin journey so far, and also of course have a little look at the future. And I just want to start with your Bitcoin story. What first drew you to Bitcoin, and how did your understanding and conviction evolve over time?
Yeah, well, it was back in 2020 during COVID. I realized I had lost all freedom. I had not the right to go out of my apartment in Paris. And I realized that without financial freedom and sovereignty, you don't have any freedom at all. So that was the start of my journey. At the same time, I used to work for corporate treasurers in France, the largest companies in France, the CAC 40. And at the same time, Michael Saylor was launching the Bitcoin Treasury strategy, at first as a defensive mechanism and then offensive. And of course, the difference was striking. And I decided to completely change all of my time spent and efforts and to focus all of it on Bitcoin. And that led me to have laser eyes focus on BTC yield 5 years later with the Bitcoin Treasury Company.
And so what do you mean when you say without any financial sovereignty, you don't have real freedom? Is it a way, that's my translation, to fight back to or against like a centralized decision that influences your individual life, or how do you look at it?
So, there are many things in this statement. The first one is that without the information of the fixed supply of Bitcoin, you cannot plan for the long term. And so if you cannot plan for the long term, you don't really have a successful life. That's basically impossible. You need to have a long-term view. You need to have faith. To have faith, you need to believe in the future. And to believe in the future, if you don't have a way to store the value of your work and your time and energy with the best asset on earth, then you can have faith. But economically, it will be extremely hard. So I think that the fact to be long-term oriented is what gives you Bitcoin. The fact to have faith precedes Bitcoin. I believe you need faith first to understand and discover Bitcoin. You need to be in a position to need it, it's on a need-to-know basis. And so when you have faith, when you are long-term oriented, when you want to think on your own and not depend on others, then you understand potentially what is money, or you need to understand it if you want to succeed in life. And then when you discover Bitcoin, you discover that you have an asset that you can bring with you all around the world. And that doesn't depend from a centralized entity. Then over time, you discover that security is a more challenged and nuanced way, of course, for individuals, for corporations. As a public figure, it's not the same as a private individual, for example. So basically, not having access to the keys can be an advantage for a public figure. specifically, Michael Saylor has said multiple times, do you want the CEO working around with private keys or not? Well, as a public company, the sovereignty of Bitcoin doesn't necessarily mean the same as the sovereignty for an individual. So when you are a public listed company, you work with institutions. And even in this case, you have institutions that adopt Bitcoin around the world, and that gives you much more sovereignty as well compared with traditional fiat currencies. So I think that the financial sovereignty comes from the fact that the value of your time is preserved over time. The value of your work is preserved over time. And then as well, it is much easier to transfer Bitcoin in case of economic, political uncertainty. You don't have costs like real estate, for example, that you need to maintain over time. And so it's just a better asset. It's a better way to protect yourself, your family, your corporation, and so on. So, it's just more freedom at the end of the day. And I guess that people that already had a lot of Bitcoin during the start of COVID could have changed countries very much in a more easier way than people that didn't. And you have seen as well, like when the Russia-Ukraine war started, people are trying to go out of the country with bars of gold.
Mhm.
Well, they got out of the country, but they left the gold bars. So Bitcoin is as strong as important as freedom of consciousness, because you can just live with the keys in your head, for example. That's quite extreme, of course, for individuals, but of course, that the only optionality that exists is what matters, because you can have the freedom, you can have the sovereignty, and that optionality for individuals is extremely important. And then for corporations, it's a bit adapted because it's basically a bridge to the traditional world with this new asset.
Yeah. So understanding this, I think, spoken like a true Bitcoiner, and seeing Michael Saylor starting what he started, and your view shifting. How did you end up becoming the deputy CEO of a Bitcoin Treasury Company? What was that path like?
Well, I had two major experiences in big consulting firms. EY as an economist, as I mentioned, where I worked with half of the CAC 40 in France, and then with tens of financial institutions at Accenture, where I used to be digital assets lead in Paris. And I used to advise those banks to set up their Bitcoin digital asset programs. And I know that they are working on it because I built some of their strategic plans to offer Bitcoin custody, to offer Bitcoin purchase options for retail and for institutions. And I was already a Bitcoin maximalist. And I was already convinced that if I was going to change for something, it would be for a Bitcoin focus and for the treasury side. And I got contacted by the board of the blockchain group, which is a company listed on Euronext Growth Paris under ticker ALTBG, that has had multiple lives. It started more than 10 years ago as a media agency. Then it started acquiring different companies. And over time, some of those companies were not profitable anymore. And that was the need to know basis for the blockchain group. And they decided to liquidate the companies that were not profitable, or to sell them. And effectively, from December 2023 towards half 2024, the group had only two companies remaining, focused on data analytics, AI, and web development. And they liquidated mainly one subsidiary that had failed. It was a Web3 company, and hence the name of the blockchain group. But that's why I joined. I joined because they liquidated the company that failed in Web3. And they then decided to move totally on Bitcoin. And, I asked two questions when we had the first call with the board. Is it about Bitcoin only? They said yes. I said we can continue the conversation. And is it about the strategy playbook specifically, or is it about something more complex or something to play with Bitcoin or something like this? And they said, no, it's about the strategy playbook.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you.
So in a matter of days, I set up a strategic plan to implement a Bitcoin Treasury Company strategy that would take the best out of what strategy had done and what Metaplanet had done. And in a matter of 2 weeks, we announced the launch of the first Bitcoin purchase, the launch of the Bitcoin Treasury Company strategy, and I joined as a deputy CEO and director of Bitcoin strategy. So that was the launch of the third global Bitcoin Treasury Company. Because you have thousands of companies in the world that have Bitcoin on the balance sheet, but only a few you can count with your hand are really laser eyes focused on BTC yield, the increase of Bitcoin per share over time, with a dedicated person, dedicated team, and a full focus on the strategy. And that's how it happened. And very quickly, in a matter of 8 months, we became Europe's top performing stock, plus 3,000% performance, and record-breaking BTC yield figures with more than 1,000%. So it's the mix of the financial engineering background, both in law and in finance, plus the experience with treasurers, plus the experience with banks, that allowed us to grow fast together with the board as well. Because in the board, we have Ludovic Chauchin-Laurent. He is the co-founder of Capital Union Bank, the largest bank in the Bahamas, independent bank, with more than 40 billion of assets. We have an ex-asset manager, and we have also the founder of one of the operational business that we still have. So it's a very lean and focused team on Bitcoin. And I joined as the Bitcoin maximalist that would implement the strategy playbook at scale in Europe.
Very interesting to hear, and thanks for sharing. It's also interesting that Saylor has kind of been shouting the playbook from the rooftops, right? Sharing the playbook. Also, there's the playbook actually exists, right? They have a website or a document like the describing the whole strategy. And what I find so interesting about it is what you mentioned, the nuance between a fully dedicated Bitcoin treasury company and companies that have a Bitcoin treasury, right? Because the entire strategy playbook goes way beyond just acquiring a Bitcoin as a treasury asset, right? It's eventually also about finding unique ways to financially engineer all the options you can raise capital to eventually build out the BTC yield. So I think that's an interesting nuance. What are the key differences you see coming also from like a TradFi, the old TradFi world and the world of Bitcoin finance? I've spent a few years in TradFi as well. I mean, you're still wearing a suit and tie, of course, but what are the differences that you've seen?
Between TradFi and Bitcoin, you mean? Yeah.
And Bitcoin finance, yeah.
Yeah. So what is funny is that, so first of all, I love wearing a suit. That's not a constraint. I've always done that. And effectively, that's the thing I wear almost every day. So it's a pleasure. And I love the orange tie. That's a nice way to bridge the two. And the difference is that effectively, a lot of tools that traditionally are very dilutive for shareholders. When you add Bitcoin to the balance sheet, they become extremely accretive. So you can see the example of convertible bonds. At the very beginning, when we announced the only fact that we would authorize the issuance of convertible bonds, the shareholders were afraid. You know, the stock did minus 20% back in January. And instantly, the day after, it did again, potentially plus 30% or this kind of movement. So effectively, there is a lot of education to be had to explain how you can have simultaneously dilution in the traditional sense, but accretion, meaning value added to the shareholders on a Bitcoin standard. So effectively, if you dilute, but you increase Bitcoin faster than you dilute, then it's accretive on a Bitcoin standard if you believe in Bitcoin. Of course, if you don't believe in Bitcoin, that's the worst thing that can happen. But that's the condition, is that when you do Bitcoin traditional finance, if you don't understand Bitcoin, if you are not understanding the long-term approach of Bitcoin, then you are probably going to be afraid or to be against in principle and not understand the difference that can happen. So to give you the example, we took the traditional instrument of convertible debt, which is debt that is basically repayable with the conversion in shares, so you don't have to give away cash. And we transformed this into a BTC denominated convertible debt. So everything happens in Bitcoin. We completely skipped fiat. In these operations, we don't have credit risk because it's fully Bitcoin denominated, the assets, the debt, and it's a long-term financial instrument. So it's over 5 years. And so in this sense, if you understand how Bitcoin behaves, and you understand that there is just with the monetary devaluation, the highest probability of this instrument to convert and to be extremely accretive for the company because the company adds Bitcoin on the balance sheet with the proceeds, then you understand that it's actually the lowest risk possible that you can take. And but traditional finance, if they don't understand Bitcoin, they are afraid, and then they can think that there is a lot of risk when they don't see the long-term approach. We are not taking short-term risky debt with margin call risk or this kind of things. It's intelligent long-term leverage, arbitraging the fiat devaluation versus the accretion of the number of Bitcoin on the balance sheet. And so you can see that as an example. Another example is the premium. You know, Bitcoin treasury companies trade at a premium to the net asset value of the Bitcoin they have on the balance sheet. And so traditional finance people, they will ask you, why is that I would have to pay a premium? But there are premiums everywhere. Hermes, the company, is not valued on the net asset value of
Bags.
of the bags. It doesn't make sense. Hermes is valued on revenues minus cost multiplied by a few years to have an expected cash flow of the company. And it's the brand, and it's the capacity to generate more revenue at lower costs. And it's basically how much earnings can this company yield over time. And for Bitcoin treasury companies, it's just that the earnings are denominated in Bitcoin and go directly towards the balance sheet itself. And so it's normal that there is a premium. It's not a premium, in fact. It's a multiple of valuation based on the assumptions of investor of the company's capacity to generate more Bitcoin per share over time.
Yeah. I love that we're touching upon this, because also the Hermes example is great, right? They or any type of company that does some sort of manufacturing, they have machines that need to be maintained, or they break down, they write them off, right? So you cannot actually have the inventory of the machines you have, or the inventory of items you have. You cannot really use that as being part of you can use it as part of the balance sheet, but not as something for your valuation, because it's actually something that is trending down, right? So like you're saying, it's more about the understanding if this company can have profits into the future. But it's a big difference with Bitcoin, and I think that's also a good nuance, right? Because I don't know if you're sometimes in the LinkedIn comments either lurking or commenting, but I love the TradFi people that, as you said, when they don't understand Bitcoin, they don't understand Bitcoin treasury companies, right? They think it's all irresponsible. You see so many bad takes on strategy, and it's blowing up, and margin call, and et cetera, et cetera. But my general comment to those people is usually, Saylor's thesis and yours is similar, is Bitcoin will be a certain price in 20 years. That is the underlying thesis of what you are actually doing right now, right? And so the people that understand the multiple to the MNAV, they understand that, okay, Bitcoin is going up in price or they align with the thesis that you have. It's going to go up in the future. That is what I'm basically investing in. As you said, can you increase that BTC yield? Is there a similar rule in Europe, like the FASB accounting rule in the US, where you can actually denominate that in Bitcoin? Like, can you use? Are there like similar rules as in the US?
So basically, Bitcoin is treated as a normal treasury instrument. So it's there accounted at the price of the Bitcoin at the time of the financial statements. And so that's really not an issue. In fact, France, with the regulator, has been very much leading the way in digital asset regulation. And we are lucky for this. And frankly, I have to say that I'm impressed by the quality of the work that the French regulator has done since the beginning of the strategy. They have always been extremely responsive, extremely collaborative with us. Every time we do something, they are collaborating with us to ask the good questions, and we answer and we adapt as needed, and so on. And so we benefit from accounting standards and overall regulatory framework that is treating basically Bitcoin as a normal asset for a company. So that's extremely helpful. And frankly, that's quite an advantage to have. One of our major shareholders, Tobam, is a 2 billion French asset manager. And back in 2017, they launched, with even the help of the local regulator, the first Bitcoin open-ended fund from an asset manager. So we have really a good and efficient regulator and regulatory framework. Would be great to have also the ability, as easily as in Luxembourg, where we have our BTC denominated debt SPV, to have BTC denominated financial instrument more easily. But today is with Luxembourg, and maybe at a later stage would be possible in France as well.
Yeah. So what is your kind of like broader assessment of Europe's regulatory and macro environment for Bitcoin and Bitcoin treasury companies? I feel that in Europe, although maybe per country there are different stances towards Bitcoin and digital assets, like you mentioned in France, but I think overall The ECB is pretty much against Bitcoin, although they have amazing marketing for Bitcoin, right? One of their latest reports said if you don't own Bitcoin, you'll be poor, which was kind of fascinating. But I think in general, they are pushing for CBDC. They have advice for, I think it was in Slovakia or Bulgaria, where the director of the central bank wanted to look in having a Bitcoin Treasury as well. We saw Christine Lagarde commenting on that. So yeah, what is your assessment of the state of Bitcoin and Bitcoin native firms like?
Well, in Europe, there is generally a problem is to see technology as good or evil. Versus the Americans, where they directly see does the technology work or not. And it turns out that Bitcoin is the best technology to store value, and it works. And so European politics revolves a lot around is it good, is it bad, and so on. And that's a very inappropriate question, as would say Yves Chefati, the president of Toban. And overall, what I would say is, as I was involved with the bank's digital asset offerings before, I know that 70%, 90% of systemic banks in Europe, major banks, they are working already on their offerings to offer Bitcoin custody. Some of them already offer them on a non-public way, like for special clients. They will offer it like privately. And many of them are just working on setting up an offering that will happen towards the end of the year 2025 or towards mid 2026. But it's just inevitable, especially now that the US has greatly changed and allowed banks to have the custody of the Bitcoin and to launch those offerings. That will accelerate a lot all of the programs. So I would say that there is still some blocking politically, because you have seen major institutions like the ECB strongly advocating basically against Bitcoin generally. But what you see is at some point, when you are losing 20, 30% of your clientele because you don't offer Bitcoin, as a bank, you start to think as well. And they have already thought about it. It's just that they will launch offerings. They will just not completely go all in on a commercial campaign for Bitcoin, because that would not be politically correct, basically. But as soon as the American banks do it and do it strongly, and especially if there is the confirmation of Bitcoin accumulation start for the United States government, that will accelerate extremely hard over the world and including Europe, because at some point you just have no choice. Bitcoin adoption is not optional. Either you buy it now, or you adopt it now, or you surrender to it later. You choose your option. So I would say that overall, the advantage of Europe is that even if it's not a strong adoption, like publicly by institutions, there is a lot of freedom for companies to adopt it and to start using it and so on. So that, and the second one is there is some issues for individuals in terms of tax, in terms of privacy. You have some regulation in Europe that is quite restrictive for this, and potentially worse over time. But basically, and it's not necessarily a great thing, but it's more bullish for Bitcoin Treasury companies, because effectively you can get Bitcoin exposure through a Bitcoin Treasury company that has no tax with the local PEA program in France, for example. It's a form of tax wrapper for like equivalent of retirement accounts and so on. And you don't. It's treated like a normal stock, so it's just more integrated within the traditional system. And over time, I expect that banks will compete with their Bitcoin offerings, and that they will propose more sovereign type solutions for individuals. You see, neobanks, they already allow individuals to withdraw Bitcoin to their own wallets and so on. And over time, even stocks will be tokenized on, for example, on Liquid, the sidechain of Bitcoin. And you will be able to interact with Bitcoin with your wallet and so on. But it's probable that 90% of Bitcoin is going to be held and transacted through intermediaries, institutions, Bitcoin Treasury Companies, and so on. So then it's a parallel work to be done by developers to write code and to enable as well peer-to-peer solution to be better and to evolve around and to provide optionality for individuals.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want: Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read, and it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order. What I personally find very interesting is that, once you understand that Bitcoin won't go away, right? It's a protocol for money, and so it is now out there, and it's for anyone to adopt and improve upon and to contribute to. And there are so many different layers of game theory that basically emanate from that, right? Like you said, I think the adoption is still voluntary right now. Later you will be kind of like forced, not by anyone else, but probably by yourself, to adopt it, because the fiat money will continue to lose value. So early movers like yourself can benefit from taking that sometimes perceived risk, right? To move early. And what I find interesting is that it's not only on the bank's side, like you said, there's going to be a lot of competition to custody that wealth, if people are, of course, not choosing to do self custody. But also on the other side, in the capital markets, like where you are basically competing, I'm thinking about what my friend Richard Byworth says a lot. I think you know Richard as well. He says that Bitcoin Treasury companies are sucking the monetary premium out of overvalued stocks, right? So we know from fiat money, you want to spend it fast, right? You don't want to store it, you want to spend it. So just as Saylor says in his thesis, right, if I have a lot of cash, what do I do with it, right? And you have all these traditional ways of spending it, like buying other companies or giving dividends back, etc. But we've come to see or discover that holding Bitcoin as a treasury asset for a publicly listed company is actually a competitive advantage, and giving investors a quote unquote safer bet. I don't know if safer bet is a good description, but let's say, a more predictable investment than investing in companies that are, probably overvalued. What is your view on that dynamic where now that you exist in your part of the publicly traded market, these other companies are seeing they are up 3,000% in this amount of time? Is this something that I should consider? What is your view on that game theory that happens over there?
So I have to say that the environment of the market doesn't feel the same as when we started. When we started the Bitcoin Treasury Company strategy, we were surrounded by people that lived through the last Bitcoin bear market. And they were long-term oriented since the beginning. And they were long-term Bitcoin maximalists for the most part. And they didn't really care about short-term price movements. And they expected volatility. And they understood that volatility is vitality. And they were here for the long run. And they are, for most of them, are still here. What I've seen over the last 2 to 3 months is the coming of newcomers that have a lot of them, and we have welcomed them, come from the alt season of the past cycles that has been basically replaced by a treasury season, where you realize that the only way to outperform Bitcoin is with a Bitcoin Treasury Company. At least it's the best risk-adjusted way, because it's the simplest way to outperform Bitcoin and potentially the way to outperform it the most. So the fact is that a lot of newcomers are not used to this level of volatility, or they are here for a very short trade. And that's a bit contradictory with Bitcoin, and that's a bit contradictory with a Bitcoin Treasury Company. Effectively, we have grown 3,000% over 8 months, but then you have a new company that launches and they do 1,000% in 1 month, and then we get asked, why don't you do 1,000% again in 1 month? Well, it's possible, and we are working for doing a lot more, but you need to be long-term oriented. We are building a long-term European empire of Bitcoin with Bitcoin per share increase over time. And we have announced plans to acquire about 1% of the BTC supply over 8 years, which is an ambitious goal, but we work on it relentlessly every day. But when you are in Bitcoin, you need to have at least a time horizon of 4 to 5 years, and the best one is forever, as Michael says. And if you are in a Bitcoin Treasury Company, well, it's at least the time horizon of Bitcoin. And there is another time horizon, is how much time does the company take to cover the premium that it has? And we take about 4 to 5 months to transform the premium into Bitcoin on the balance sheet. And that's massive. It's unseen in capital markets overall. And so we see a lot of traders spend their day to compare Bitcoin treasury companies, which is fun. And you cannot say that there is not a competition to acquire the most Bitcoin possible and as fast as possible and in the most accretive way as possible. But I think that you shouldn't lose sight of the long-term arbitrage and the long-term benefits of each of those major Bitcoin treasury companies together that are acquiring the best asset on earth and benefit from their local premiums and their local advantage, and each of them their own value proposition. For example, our value proposition is that while we have ATM type structures for regular purchase of Bitcoin, we also have this BTC denominated debt that allows us to have at any time a major investor that would completely cover the premium with one transaction that would be massive. So we did that in March, for example, And we work relentlessly every day with investor calls and with different discussions with various parts of the world, investors around the world, to get to those massive purchases. But that requires some time, and that requires some faith, and that requires some execution as soon and as fast as possible, but not in all conditions. So, the playbook is to acquire as much Bitcoin as possible, as fast as possible, but in the most accretive way as possible. And we are looking at partners that can work with us in the more accretive way as possible. So I would say that, I would see that the market has evolved and has sometimes high expectations for the short term, that I would caution to say it's a long-term value play, and it's a long-term Bitcoin maximization focus that you need to see in a team, rather than looking for a quick gain based on some market announcement. So that's why we are backed by the major investors and legends, Adam Back, Yves Shefati, the president of Tobam that I mentioned, Fulgur Ventures, and that's why we have one of the strongest cap table. I mean, the cap table, the investors, the major ones, understand the Bitcoin Treasury Company and focus all of their time and energy to maximize BTC yield over time. And so, you can count on us to maximize that BTC yield and continue to grow as fast as possible, but in the most accretive way as well.
This was a question from X. Now that we're talking about it, would you see this as the moat for ALTBG? Because like MicroStrategy is kind of the OG, has the preferred stocks. MetaPlanet has low interest and starving yield in Japan, so they have, that's kind of their moat. Would you say this is yours, or is there anything else that people should know?
Well, we have been authorized to do private placements in equity. We have been authorized to do ATM type structures, convertible debt, any type of financial instrument, including public offerings and fiat convertible debt. I think that the unique advantage that we have is that we are the first and largest European Bitcoin Treasury Company. And we have this unique structure in Luxembourg with the BTC denominated convertible debt. Basically, tomorrow, if we find a sovereign fund that want to put 500 million, 1 billion, with the downside of Bitcoin and the upside of the Bitcoin Treasury Company, we can. And that would be a massive BTC yield, of course. And the second part is we have not even yet had an OTC ticker, a proper one, in the US. And so we have not even yet launched public offerings. And so I think that when you are for some time in Bitcoin, you feel like 8 months is a lot. But at the same time, we are extremely early. Mm-hmm. I mean, we have 1,700 BTC plus on the balance sheet. And with the amounts I mentioned, we have an authorization for more than 10 billion euros of capacity. And the growth we have seen, the 3,000% plus, is without yet a full liquidity access in the US. And of course, I've mentioned that any best practice that strategy has done, that MetaPlanet has done, we are, of course, looking at it. The preferreds of strategy are extremely interesting. And we look at a type of structure like this, that would be an equivalent for Europe. We look at anything that would accrue in Bitcoin per share. And I think that the value proposition we have is the team is laser eyes focused on BTC yield maximization. In one operation in March, we were able to generate 700% BTC yield. And that was raising 50 million euros on our own. In 2 months after, we were able to raise 100 million plus euros. In 1 month, we have more than doubled the BTC stack. So it's a race compared to ourselves, and we want to maximize BTC yield. That's the full focus. And we have a team dedicated for this with financial engineering at the heart of each of us that we have. And we also have now announced that we are recruiting as well more people to join the team. So if you are interested in the audience, please reach out and let us know what you would be able to bring. And I think what's very interesting is the combination with between global demand and local scarcity. Because in Europe specifically, we are so early in Bitcoin corporate adoption. And you have seen with other companies launching, there is so much demand. You have seen not only, of course, our performance, but the smarter web, H100, and so on. And that's amazing to see so much growth in each country and how you can capture opportunities like this. And you know, the most capital those companies raise in their own market, the most we will raise capital because they are educating investors in other countries. And those investors, if it works, they will come to us as well over time. So we are really working together, the Bitcoin Treasury companies. And then it's a question of focus. You know, we get contacted every day to do thousands of things, but the best BTC yield comes out of the simplest and the most efficient financial products. And I think that the BTC denominated note that we have issued is basically a nuclear reactor that doesn't exist anywhere else. And every time I speak with family offices, sovereign wealth funds, and so on, it is just not comparable with anything else. It is a way to have a free call option on a Bitcoin Treasury Company with the downside protection of Bitcoin, with conditions that basically 99.99%, if Bitcoin doesn't fail, have the Bitcoin Treasury Company convert the instrument, and extremely accretive for all shareholders. And I think that's how we've been able to be one of the fastest growing Bitcoin Treasury companies. And I think that's how we have the capacity to continue to outperform our benchmark.
Yeah, it seems like capital allocators, whether individual, professional, like family offices, are starving for different type of exposure. I think, of course, also to Bitcoin, and of course, some entities aren't able or allowed to buy Bitcoin straight up, right? So they're looking for different ways. So as you mentioned, you see these Bitcoin treasury companies pop up everywhere. I think they all have kind of like a different focus. I think there's also an interesting discussion to have around, should you have a running business or not, right? I think that's a different conversation. But we see these companies pop up, and people have to find ways, investors have to find ways to differentiate and like judge these companies. What would you advise to people looking at these companies? Like, how should they judge the differences? But also, because we see this as an opportunity, right? Some people are saying like, "Oh, this feels like ICO times 2017." Some will not survive, which I would probably agree with, because wherever there's opportunity and people will try, some will obviously fail. Yeah, what do you see as the biggest risk also facing Bitcoin treasury companies today? There are people that just see an opportunity and are perhaps less into it for a longer time, as you, Sharon, you are. So that's two questions within one, but I think they kind of tie together. So how do we judge all these Bitcoin treasury companies popping up, and what do you see as the biggest risks?
Yeah. Well, the playbook is extremely simple and it's public. And the way to differentiate is to not differentiate. The way to outperform the market is to adopt the simplest and less risky approach, which is to just raise capital, accumulate Bitcoin, hold it forever, not sell it, not lose it. And 99% of companies will just forget about it. And they will try to do something different, something more innovative, or something more complex, and they will fail. They will fail because they will end up doing some leverage that is short term and that is risking the Bitcoin. They will end up doing some things with the Bitcoin. They will end up doing some hedging of the Bitcoin, while investors really put a massive premium on the companies like Strategy, like Metaplanet, like us, and like new ones that are emerging to focus on the objective of maximizing Bitcoin per share over time. That's it. And so then comes the second difficulty. For a lot of companies, they don't have the traditional corporate finance background. Not everyone comes from 5, 10, 15, 20, 30 years of experience in corporate finance, in asset management, in banking, in tech. And I just described our team. We literally have an ex-president of an asset manager, the co-founder of the largest independent bank in the Bahamas, the founder of a tech team from the 1990s that has successfully driven growth for more than 20 years, and more background as corporate treasury that I described before. So it's, I think, the human capital is the most important, because at the end of the day, it's about raising capital, but about raising capital in accretive ways. So I will give you the example of our ATM program with Tobam. Tobam is literally the first asset manager to have launched a Bitcoin open-ended fund back in 2017. It's effectively the largest track record for tracking Bitcoin before BlackRock launched its ETF. And we have partnered with them because they are already a strategic investor. They hold about 5% of the shares, and it's a long-only form of ATM program. Because, you know, ATM can also be quite punishing a stock if you partner with institutions that have no incentive to be on the long term as a strategic partner for the growth of the company. And in this case, we have set up that the issuance of new shares can only be basically at the price of the day before, the closing one. And so it incentivizes to activate the ATM just in conditions where the share is in strength. And basically, Tobam doesn't have to and is not basically generally interested in shorting the stock. Effectively, it would be the contrary. So they are long investors in Bitcoin, long in Bitcoin Treasury Companies, long ALTBG, and they have no interest in shorting a stock like us. So that's a strong way to do ATM type instrument in the most accretive way. So then we are being told, oh, but you could activate the ATM even in down days and push the stock down and so on. Look, it is about acquiring the most Bitcoin as possible and in the most accretive way as possible and with a long-term focus. And so if you don't have a long-term focus, you will have issues as a Bitcoin treasury company, because you will partner with, we have been contacted by 5, 6, 7 companies that want to help us raise capital, and then you discover that they are basically short sellers that just want to take full advantage of your stock and are not long-term partners. So we welcome a lot of short sellers because they become shareholders of the company later on. We've had a multiple of them already. But if you partner with an entity that is not long-term aligned with the common shareholders and with the Bitcoin long-term strategy, that's less accretive as if you partner with a strategic shareholder, strategic partner that will help you grow. And I think a great example in Japan has been Metaplanet with Evo Fund, and we've structured something similar with Tobam in France, with even the specificity that we don't even pay Tobam, and so they don't make a profit for their own. Any type of delta they benefit from is for their fund holders. And the more benefits their fund holders have, the more capital they allocate, the more ATM we do, and it's extremely accretive for the company. So yeah, it's just about the team, the focus, the long term, and the accretiveness on a long-term basis to not create a situation in which you can go extremely fast for 1 month and then you get burnt because you are just partnering with entities that are not aligned with your long-term growth.
So about the long-term growth, Saylor, and I think you align with this, right? Talks about 2033, 2034. 99% of all Bitcoin will be mined. The last 1% will be mined in the 107 years after. So that's more like a rounding error. So he really views these coming 8-9 years as the Bitcoin rush. Your goal is to acquire at least 1%, right, of the Bitcoin supply. Where do you see ALTBG in like 10 years? Where are you going? Do you want to become like the European Bitcoin bank? What's the goal?
The goal is to be Europe's largest publicly traded corporation, more than 2010K BTC on the balance sheet, and to be a monster of credit markets, where you become the cornerstone of digital capital markets with Bitcoin as the core store value, and you become the major part of the capital markets in your continent. And I think that we don't know yet how and what will be the shape of this for the next 10 years, but you start to see it with strategy. You become the most attractive stock on your region. You become the most liquid stock, the best performing preferreds, the best performing converts. There is no second best option to generate levered exposure to Bitcoin on a risk minimized way. And for any type of capital pools, you will create a different type of instrument that would be tailored to those needs while remaining simple to be scalable. And just focusing on doing this in the right way and the fastest way and the most accretive way will be the winning strategy. And so then a lot of investors wonder, what is next after this model? Will they be doing stuff with the Bitcoin and so on? I believe that the business model is already there. It is to provide financial instruments that are securitizing Bitcoin for different pools of capital with the right structure to meet those investment mandates, and on the company side to maximize the number of Bitcoin per share. And so that will be the full playbook. And then on top of this, when you are the monster capital market player with the most Bitcoin on the balance sheet on your region, you have unlimited options. So you can do the most options that you have on your hands. You have the choice. And I guess that the winning choice, will always be, as Michael say, to not be distracted by a lot of good ideas and to focus on the best idea which is to securitize Bitcoin with financial instruments that scale. And that's, in today's dollars, a $500 trillion market opportunity. It's literally half of the value in the world. So what's the second best use case? There is no second best use case. And that's what we will focus on. And that's exactly what I mentioned, that 99% of companies will not understand or will think that they cannot do it. And I think that's where there is a misunderstanding, because there will always be a demand for different type of companies with different type of securities, with different type of risk return profiles. And that's amazing. And probably at some point in the future, there will be some M&A activity, but M&A is extremely time consuming for results that are extremely uncertain sometimes. So unless there is an extremely clear and aligned board on both sides and clear and clean structure, then M&A is less accretive than BTC accumulation per se. But then you have exceptions, and sometimes it can happen because it makes sense. But that's not the core strategy, just an additional lever that Bitcoin Treasury Company could leverage at some point in the future.
So in general, what makes you most bullish on Bitcoin, but maybe even more Bitcoin's evolving role in global finance? So what I hear you say is, by securitizing Bitcoin, this eventually becomes a mode for something to be used in the future for I would say more effective financial structures. Is kind of like how Saylor talks about it, right? Like, do you want to own Manhattan even without knowing what is going to be built there, right? It's very hard to predict. It was very hard to predict that, New York City would have been built on the land of Manhattan. What makes you most bullish?
I think that what makes me most bullish is, contrary to what 90% of people think, Bitcoin is actually decentralizing. So, decentralizing, because from the surface, you could think that Bitcoin is centralizing right now. You could think that Bitcoin is going into institutions and therefore is centralizing. What I see is that 2 years ago, there was like, you could count on your hands the institutional grade solutions to get access to Bitcoin. And today already, it's tens of solutions from institutions that are adopting Bitcoin and competing on a daily basis to custody Bitcoin, trade Bitcoin, exchange Bitcoin, get peer-to-peer functionalities on their Bitcoin solutions. And that's what makes me a lot more bullish. It's that we are both extremely early. Less than 5% of corporations are even thinking about Bitcoin right now. So the potential is extremely massive. And at the same time, you see that Bitcoin is already the only asset the US government does not want to sell and plans to accumulate. And they are literally telling you that they plan to accumulate Bitcoin. And at the same time, you have thousands of banks in the world. Maybe it's more reasonable to say to date that is tens or hundreds of banks that are really planning for this. But effectively, that was not happening 5 years ago. So effectively, you will have tens and tens of more institutional players coming into the scene and interacting with Bitcoin. And every time one institution interacts with Bitcoin, they will educate all of their bank. They will educate all of their asset management practice, all of their practice for banking, for retail banking, education. There will be a lot of education being produced by those institutions. And those institutions are decentralizing, actually, a lot of the ownership of Bitcoin, which was effectively either not existing because it's new participants, or they are providing just new participants to the network. And so the more capital is going to the network, the more people are introduced to the network, the more institutions are interacting with the network, the more decentralized and secure it will become. And as Jeff Booth says, Bitcoin is unique because it's the most decentralized and secure network bounded by energy. And what makes me also very bullish is the increasing involvement of a lot of governments in Bitcoin mining. Because when you have tens of governments in the world that are not necessarily friends that are involved in Bitcoin mining, then you know that it will be extremely hard for everyone to agree on anything around Bitcoin mining. So I think it's already the case. It's just that it seems that we are decentralizing, and it seems that I see a lot of new solutions emerging for private, individual Bitcoin ownership, transactions, social media, Nostr, and so on emerging. And all of this decentralized tech is happening, is emerging. And that's extremely bullish for Bitcoin as well, because you see there is a decentralization of the custody among institutions, and there is a decentralization of and increasing variety of solutions for the individual use of Bitcoin without even institutions. And then institutions compete to get access and to interact with Bitcoin that is in self-custody as well. So it's just a massively bullish setup, together with the fact that nothing stops the train of monetary devaluation.
Mm-hmm. Yeah, what I like, again, like a little piece of game theory, right? But anyone who voluntarily adopts Bitcoin is eventually also incentivized to contribute to it, right? Whether it's with mining or education. I think that aligns with what Jeff Booth says, right? If we can keep it decentralized and secure together, then that will actually help Bitcoin proliferate even further in the world. So thanks for sharing that. I'm looking at the time. I just want to wrap up with some few short questions. I have some questions from X as well. First off, you mentioned Michael Saylor, right, being your inspiration when you saw him start with strategy. Now you're kind of being mentored by him at some times. What does that feel like, and how has that influenced your conviction as to what you're doing?
Yeah, I mean, I'm incredibly grateful to have met one-to-one with Michael multiple times, and he's been extremely available and very sharing of his best practices and everything that works, and his advice is extremely valuable. Even the fact that we have one single SPV that is fully scalable in Luxembourg is part of the outcome of one of the discussions I had with him, because we had at the beginning the idea of having multiple SPVs, and we discovered, okay, we can have one SPV that will be fully scalable and that will be ready for any investor to come in at any time, and that will be a nuclear reactor for the Bitcoin Treasury Company. And that was through a discussion with Michael. So I'm incredibly grateful for Michael' time. I've said him multiple times. He's changed my life, the life of my family, and I'll be grateful for all of the work he's been doing for Bitcoin infinitely. So it's just amazing. And on my side, I'm also available for anyone that would be willing to have some advice on launching a company. I work for Bitcoin, and I'm happy to help all Bitcoiners around the world.
All right, two very short questions from X. Will there be a statistics website similar to Metaplanet and Strategy where shareholders can view all the metrics?
We are working on it.
Awesome. And are you planning to change the name given the connotations of blockchain, and you already have the B, which just could be Bitcoin?
Yeah, I understand. So the first thing, I want to say that we need to do better, faster execution of the strategy. We are going as fast and accretive as possible. But of course, we listen to the feedback and we want to always go faster and better. And one of the main takeaways I've seen on X is that we need to work on calling our shots more in advance. So we've been careful because we don't want to create frictions with forward-looking statements with local regulators and so on. So we want to be careful and conservative. But I take community feedback. We have published our BTC strategy, the long-term plan. But I understand it would be valuable to have more of those shot calling in advance, and we will be working on it. I think the community has asked a lot about OTC tickers, transparency, and the website, and so on. So, yeah, we will be working on it.
Awesome. All right, man. My last question, and I ask everyone the same question, which is, what is a core belief you will never let go of? It could be either about Bitcoin or business or life.
I believe that you need faith to grow substantially in life, and that it is the core of everything. So I pray every day, and I believe that's the most powerful thing a human can do.
Well, thanks so much for sharing. Thanks so much for your time and your insights. I really enjoyed it, and I appreciate your time. Thank you.
Thank you so much, Bram.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.